Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is June 5th, 2014, and we got a pretty good market rally on our hands today, and that's been the case for the last few weeks now, where we spent the whole entire month of March and April and much of May in a sideways consolidation pattern, and it was frustrating to trade because personally I would rather have a downtrend to go short on, because when you get these narrow trading ranges like what we had during that March through May time period, it makes it really hard to get traction on the market. So then we break out in late May, or in the latter third of May, and we've been rallying since. We've had 2 down days, and really the down days aren't really down days. I mean, they quickly get bought up by the bulls on the dip, and we closed near break even to finish out the day. So we're up about like 9 out of the last 11 days, which is really impressive. The rally itself, it reminds me a lot of the rally that we saw back in February, where we had just had a pretty substantial sell-off. I would say the sell-off is similar to the sideways consolidation pattern. And the reason why I say that is sometimes the market, instead of dipping, it will actually just consolidate for a long period of time, and it will churn the longs and it'll churn the people who are short out of their positions. And that's essentially what it did. So instead of making like a downward move, it just makes a sideways move, but it's still sort of like in a pullback, in the sense that it's breathing before resuming the uptrend, or or taking a rest. So now that the uptrend is obviously resumed, we got like 9 positions going into the afternoon here, and I'll probably close out at least 1 or 2 of them before the close. But this market rally reminds me the most of this, like I said, of this February rally that we saw, and today in particular reminds me of this particular day in early March, where we had been already trending up for quite some time, and then we just had this huge push higher, and you can see it sort of happened towards the highs of the market rally. And I would say that we're starting to see a maturing of this rally. We're up quite a bit today at 12 points, and that could be very similar to what we saw back on March 4th. So I do think there's a little bit of caution that's warranted. That's why I'm inclined to take a couple of long positions probably off the table today. The hard part is deciding which one, because they're all doing so good, and you can make a case for all of them really. And one of them in particular, BBY, we're up about 5% on this trade here, and we got in at on 529 at 27.37, and it's been doing good. One of the things that always concerns me about trading BBY is the time element. I don't really like to be in BBY for a long time, because there's always this element of overnight risk, so that the longer that you're in it, the more exposed that you could possibly be to it. I don't put it in the same category as a biotech stock, but you look at the sell-off that we saw back on 1/16 of this year, and you can see that was a pretty heavy sell-off. And so the one thing that I don't want us to be put in the position of is waking up one morning and all of a sudden there's this huge sell-off. So that's something I'm very passionate about avoiding, and in the case of BBY, that's something that I don't want to see happen to us, like it did for people who might have been long on it back then. We weren't long on it, but definitely others were. So that's a huge concern, the overnight risk. So we got 5% in it. I recognize the fact that this thing could really just take off and try to fill this gap, and maybe get back up to the $37 level. I don't think it would happen overnight. I think it would take a month or 2 for it to happen, and then you have to ask yourself, okay, is BBY really worth holding for a couple of months, hoping that it'll fill that gap, while also inheriting any kind of overnight risk that might be associated with that stock during that same time period. So for me, I'm more or less tempted to say let's take the 5% and move on. And the other thing too that we've seen this thing break out before. This isn't the first time it's had this song and dance. It broke out, here back in early April, and it gave back the gains in a big way, and then it broke out again in intraday wise. It broke out in the last day of, or the second to last day of February, and then it gave it all back again. So I don't have a high level of trust in the stock, even though it's working out perfectly like we had traded it. There's a likelihood that I'm going to book the gains today. I mean, I think we're doing pretty well in the trade, and I don't want to push the odds too much. So that's that on BBY. Now let's look at some of the other indices too. The RUT. This is the biggest story of the day, really. The breakout in the RUT. I mean, it's way beyond the R3 pivot point. It's back above the 10-day moving average, the 50-day moving average, and just really outside of all this mess here. And if this was a stock, this would be a pretty appealing stock to get long on, but just because it's a perfect breakout play, and it's following through nicely. And this is what sort of gives me hope that this market may continue to rally, because the RUT finally seems like it wants to join the party. And it wouldn't make much sense for the RUT to be joining the party just as the S&P is not going to join the party anymore. So, or to leave the party, I guess would be the better way to coin that phrase. So the Russell's breaking out. That should be able to give some support to the markets in the days ahead. Nonetheless, like I said, I'm always concerned about the unknowns. What could happen tomorrow, and what if we wake up and the market's down 20 points because the employment number is so bad? How does that affect our portfolio, and how does that affect our ability to trade profitably? And so that's things that I have to strongly weigh. And it's like a chess match. You gotta look at the the next 3 or 4 moves before they ever happen, and basically put yourself in a position to profit off of it, and that's what I'm trying to do. I'm the biggest thing is avoiding the unnecessary risks, and that might be why I end up closing out a few positions today. But also, I still have an eye on the fact that the Russell's finally turning that corner. It might look like it want to get back to those highs again, and if that happens, the S&P is going to follow suit. Now, if you look at the NASDAQ. The NASDAQ looks great too. I mean, it doesn't look near as oversold, or overbought, I'm sorry, overbought as the S&P. You look at the S&P, it's just been a machine, okay? Now, if you look at the NASDAQ, it's bull flagged here really nicely, and now it's breaking out that bull flag. So there's also the likelihood that it could see 43.75 in the next couple of weeks, and that happens like with the Russell. That's going to pull the S&P up with it as well. So some things definitely to be excited about. A trade that I got into today, and members of the Splash Zone got into, was NXPI. Really, really good trade so far. We got in earlier today at 62.74. It's now at 63.56. So we almost got about $1 worth of profits per share on that, or about 1.3%. Here's what I liked on this trade. Okay. Unbelievable ascending triangle, and I think this has been one of the trade setups that I've been posting at night too. I post so many of them, and do about 5 a night of different trade ideas that you can look for the next day, and I know that NXPI has been one of them recently, and finally it's breaking out. So what I did is it gapped up this morning. I'll expand this chart here for you some. It gapped up this morning, and then it sold off, and then it tried to rally back, and so it looked like it was going to go ahead and retest those highs again. The market was behaving well, so and it was still holding this breakout level, okay, despite the fact that it had given up the morning's gains. So I said to myself, okay, this is probably a stock that's going to go right back to the highs. Was I expecting 63.57 at this point of the day? No, not really, but I'm never surprised, because I know that stocks can do whatever they really want to do, and if it wants to get up that high, it's going to do it just like it is right now. So, I don't oversell my stock trades. I just take what I can get out of them, and I don't, when it comes to price targets, a lot of people live and die by the targets. I don't really put too much merit in them. I'll provide a price target. Like on NXPI, I provide a price target of 68.75. I may sell it before it even gets there. I may sell it after, or way above it. It just doesn't. it's more of like a guidance tool. It's what I think it's capable of doing. It doesn't necessarily mean that's where I think it'll get to, because if I can get 2 or 3% out of the trade, I'm still just as happy, and I'll move on to the next trade. What happens a lot of times is traders think that because that's their target, like these brokerage firms do, that's where the stock has to get to. Well, the problem is you're not a brokerage firm, and you can't pump your own stock with, these corny upgrades that companies, or downgrades that these the big banks like to do all the time to try to help their positions out. You can't do that, and so putting targets on stocks and stuff, it really doesn't. It doesn't enhance your trading at all. It really doesn't. Now, what it does do is that if you look at a trade and you say, okay, I'm going to risk 2% on this trade, but when I get into the trade, there's a lot of resistance above, and it probably can't get more. There's the best logical price target is about 2% over the current entry price. Then you know that's not a good trade, because you got a 1-for-1 risk reward, and that doesn't really give you an edge for trading the stock. So you want there to definitely be the opportunity for the stock to get to that price level without a lot of resistance along the way. And if you see a stock where the resistance or the first target price is really close to the entry price, and it's something that is the same ratio as what you're risking on the trade, then pass it up. It's not good. So that's my approach on the targets. I don't live and die by them. I do, write down a target for every trade, but I don't think once you decide to pull the trigger on the trade, I think what's more important is that you manage the risk side and you keep that as tight as possible, and just let the profits take care of themselves. If you always manage the risk, I say this probably every time I do one of these Google Hangouts, but when you take care of the risk of the trade, the profits take care of themselves, and that'll always be the case. Now let's look at some other trades here too. There's a few others that I wanted to discuss. PHM. Let me get this back to normal here. PHM. You can see here, this was one that I was, considering getting into. I chose the NXPI trade. I think that was the better trade on the day, but I mean, this was a good one too. I really don't want to add any more positions at this point. I got 9 of them, so I'm looking more or less to sort of curtail my long exposure on this market while it's rising. But yeah, PHM, nice bull flag, popped out of it right off of that 10-day moving average. Excellent trade setup. I still think it's probably a good trade. You could put a stop loss at like 19. I mean, it was better when it was at 1964 where I was looking at it. And it's about a 1.5% higher since then. But you could put in a stop loss at like 1938, and it's still legit, very legitimate trade. Let's look at COG, KOG. And this one's breaking out beautifully. Now earlier in the day it was actually in the red, and I was like, I don't know if really a trade I want to jump into. So, but I mean it's rebounded nicely, just like NXPI, just like PHM, and it's got a nice base. It's breaking out nicely. I think you could put a stop loss on this one, probably like 1234, and trade coordinate. It's probably a little bit more of a looser stop loss than what I would personally be comfortable with. Nonetheless, the trade setup does look pretty good if you can handle that kind of a risk on the trade. FTNT, I've been eyeballing this one for a few days. I didn't get into it mainly because we already had a software play that was performing pretty well in ACAM, AKAM. So it seemed like a little bit redundant to go ahead and get into another stock like FTNT, which is same sector, same industry, software application. And so yeah, you had this inverse head and shoulders breakout, not the cleanest of ones. You could almost say that's a double bottom, and forget about this left shoulder here. But nonetheless, it's breaking out. 2268 was a breakout level. You can still probably get into this one as long as you're willing to handle a little bit more risk. I don't like to go beyond 4% of risk on a trade. This one looks like it has a little bit more than that. You'd have to go at like 2192. Let's see what that risk would be. Yeah, maybe about 4.1, 4.2% on the trade. I would pass up on it personally, just because I don't like to take on that much risk. I like to keep my risk as tight as possible. That way, my risk-reward ratio is always maximized in terms of favorability, and that helps me trade successfully year in and year out, and month out. DHI, bull flag pattern here. This was my second choice, honestly, to the NXPI trade, and the reason why was I already had a stock in that industry, and it's not that I'm trying, or in that sector, and it's not that I'm trying to get this diversified portfolio. If you look at it right now, we got 9 positions, and I think it's largely tilted towards the tech side. I mean, we have NXPI, we have WDC, and ACAM, and then you can even make peripheral connections there with like HBQ and BBY, even though those are more retailish. Nonetheless, I really, we already had HOT, and it was doing pretty good, and so I wanted to add a semiconductor to the portfolio because we didn't have any of those, and HOT's doing all right. It had that dollar dividend yesterday, so it sort of messes up the price. We're up about 1.3% on it right now. DHI, it's breaking out nicely. I like it a lot. I wanted to get in. Earlier today, I saw it at like 23.79. It looks really good. It's still good at 24.07. But if you're gonna jump into it, you probably got to put a stop loss around yesterday's lows, which would be 23.37. If you wanted more than that, I would probably go below the 27th of last month's lows, which would be about 22.12. So that's that. And let's look at one more trade setup here. SPN, not my favorite one, but I think it's playable. It's hold on to that 10-day moving average here pretty well, and breaking out to new highs. So I just don't know if it's really going to break out really hard and fast. But if you go 32.82 as a stop loss, then you got about a 3% risk on the trade. It sets up nice. So and this is another one where it'd be a redundant play for me. I already got HAL going, so. And that one's doing pretty good. I don't really have any desire to swap out of that for SPN. I think Halliburton's one of the better oil plays to be in right now, and until proven otherwise, I'll stick with Hal. That's going to do it for today. Great time with you guys. I'm glad I was able to go go over a lot of charts and explain some of my theories and my rationale behind my trades and the market conditions. If you guys have any questions at all, always feel free to email me at ryan@shareplanner.com. Or if you're a member of the sponsor, don't ask questions. Always ask questions, because I'm in there every day. I'm at your disposal. Ask me questions. Ask me what do I think about a certain stock, a certain trade, a certain theory, a certain idea. I'm there for you guys. I'm there to answer your questions, to help you out. I want you guys to succeed, and I truly do mean that. And people are succeeding, and that's the great thing. It's an incredibly rewarding job that I have, because every day I get to see people increasing their finances and their capital and their portfolio, and it's just a real true blessing. So if you guys have any questions, once again, hit me up, email. I'll be in the chat room the rest of the day. God bless you all, and take care.